Hello everyone, welcome to my channel. Today I'm going to talk about 2022 standard mileage rates announced. As it does every year, the Internal Revenue Service recently announced the inflation adjusted 2022 optional standard mileage rates used to calculate the deductible cost of operating an automobile for business, charitable, medical, or moving purposes. Beginning on January 1st, 2022, the standard mileage rates for the use of a car or a van, pickup, or panel truck are 58.5 cents per mile for business miles driven, including a 26 cents per mile allocation for depreciation. This is up from 56.0 cents in 2021. 18 cents per mile driven for medical care or by an active member of the armed forces for moving purposes. This is up from 16 cents in 2021 and 14 cents per mile driven in service of charitable organizations. The business standard mileage rate is based on an annual study of the fixed and variable cost of operating an automobile. The rate of medical and moving purposes is based on the variable cost as determined by the same study. The rate for using an automobile while performing services for a charitable organization is stationary set. It can only be changed by congressional action and has been 14 cents per mile for over 15 years. Important consideration: the 2022 rates are based on 2021 fuel costs. Given the potential for the continuation of substantially higher gas prices, it may be appropriate to consider switching to the actual expense method for 2022, or at least keeping track of the actual expenses, including fuel costs, repairs, maintenance, etc., so that the option is available for 2022. Taxpayers always have the option of calculating the actual cost of using their vehicle for business rather than using the standard mileage rates. In addition to the possibility of higher fuel prices, the bonus depreciation and increased depreciation limitations for passenger autos that were part of the 2017 Tax Cuts and Job Act may make using the actual expense method worthwhile during the first year a vehicle is placed in business service. However, the standard mileage rates cannot be used if you have used the actual method using Section 179 bonus depreciation and or maker's depreciation in previous years. This rule is applied on a vehicle by vehicle basis. In addition, the business standard mileage rate cannot be used for any vehicle used for hire or for more than 4 vehicles simultaneously. Employer reimbursement: when employers reimburse employees for business related car expenses using the standard mileage allowance method for each substantiated employment connected business mile, the reimbursement is tax free if the employee substantiates to the employer the time, place, mileage, and purpose of employment connected business travel. The Tax Cuts and Jobs Act eliminated employee business expenses as an itemized deduction effective for 2018 through 2025. Therefore, employees may not take a deduction on their federal returns for those years for unreimbursed employment-related use of their autos, light trucks, or van. However, those who are self-employed are eligible to claim expenses for their personal vehicles used in their businesses. Faster write-offs for heavy sport utility vehicles, SUVs. Many of today's SUVs weigh more than 6,000 pounds and are therefore not subject to the limit rules on luxury auto depreciation. Taxpayers with these vehicles can utilize both the Section 179 expense deduction up to a maximum of 27,000 and the bonus depreciation. Section 179 depreciation must be applied before the bonus depreciation to produce a sizable first-year tax deduction. However, the vehicle cannot exceed a gross unloaded vehicle weight of 14,000 pounds. Caution: business autos are 5-year class life property. If the taxpayer subsequently disposes of the vehicle before the end of the 5-year period, as many do, a portion of the Section 179 expense deduction will be recaptured and must be added back to income. Self-employed income for self-employed individuals. The future ramification of deducting all or a significant portion of the vehicle's cost using Section 179 should be considered. Consider bonus depreciation. Consider using bonus depreciation as an alternative to the Section 179 deduction. Under this provision, a taxpayer can elect to claim a deduction of 100% of the cost of a new or used vehicle used for business in the first year it is placed into business service. However, the luxury auto rules impose a maximum annual deduction for depreciation, including the bonus depreciation. For example, in 2021, the maximum depreciation deduction for an auto for which bonus depreciation was claimed was 18,200. This compares to a maximum of 10,200 if bonus depreciation isn't elected. Of course, if the vehicle is used only partly for business, then only the business use percentage of the cost is eligible to be deducted. After 2022, the deductible bonus depreciation percentage drops by 20% points a year until 2027, when, barring an extension by Congress, no bonus depreciation will be allowed. Whether to claim bonus depreciation, Section 179, regular depreciation, or a combination of these methods for a business vehicle, or to use the standard mileage rate instead, can be a complicated decision to make. Thanks for watching this video and do not forget to subscribe to my channel.